As you're shopping for insurance, one of the biggest questions you need to answer is how much do you want to buy? So that is a big important one, and we're going to talk about that right now by going over a couple of rules of thumb and then getting into some other tips. Rules of thumb are, of course, not perfect, but they can be helpful as a guidepost or maybe to alert you if you're picking a number that's way too low. But the idea is that, maybe you can use them for some information, and then we'll get into how you can get even more detailed. So the first rule of thumb is the 10 times income rule. This is a popular one where you just multiply your income by 10. And here's a math tip for you. You can just add a 0 to the end of your income, and that gives you a multiply by 10 answer. You would want to use your income before those deductions come out of your paycheck. So this is your gross income before taxes are withheld or before your 401k contribution or your health insurance comes out or whatever else might be coming out of your paycheck. We want to use that bigger gross income amount. The number 10 might not be the perfect number. So there could be some cases where you actually want to go with a much bigger number because you might have other expenses that need to be accounted for and your income today doesn't necessarily reflect that. It's also possible that a lower number is appropriate. So again, with rules of thumb, we want to take it with a grain of salt. Next, we have the DIME formula, and those letters DIME, of course, stand for debt, income, mortgage, and education. These are some of the biggest expenses that your loved ones might have to pay after your death. So we want to make sure that they can afford to pay those. To use this one, you're going to add up all of those expected expenses. And then, of course, you don't have to just do those four. You can add other expenses or other needs in there. You might have major purchases coming up. You might have family members with special needs that cost more. You could want to factor in some raises if your income is going to increase over time. And those are all things that the 10 times earnings formula does not take into account. It's important to run the numbers one way or another and just get specific. So I like using a combination of information sources, and that might mean using multiple different rules of thumb, maybe a couple of different calculators. These are available online to tell you how much insurance to buy. I'll put a link to at least one or two of those in the description below. And you can also talk with a life insurance agent or some type of service that sells life insurance. And when you do that, I don't sell insurance, by the way, I'm not a life insurance agent, but when you do that, you're able to get a couple of different views on this, and you can compare and contrast those and decide which one makes the most sense. Something might stick out and give you an idea and tell you if maybe you need to buy more or less or look at things a different way. And going through that process is just super helpful. By the way, I do want to ask you to please subscribe to this channel. It helps you keep up with things like this, and it doesn't cost you anything to subscribe. It also helps me out a tiny bit, so thank you for doing that, and thanks to everybody who has subscribed. I really hope this has been helpful, and take care.